Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis because human emotion will never change. Today is September 11th, 2012. Lots to talk about, so let's get started. First of all, I'd like to say that my thoughts and prayers go out to the victims of 9/11 and their families. It was a tragic day indeed. Um, and I just wanted to mention that first. In any case, let's get started. This is the chart of the SPY, which is the ETF that tracks the S&P 500. Okay, as discussed in the previous video, I did mention that today or yesterday's move, which was the down move yesterday, which was everybody thought was bearish. I had mentioned in the video that we did not make that move based on volume, and without that volume, it does not validate the price. Again, we need to have volume to validate the price, and sure enough, today we get a little bit of a pop, but it wasn't very much of a pop. But on a normal basis, we did essentially get somewhat of a sadwards motion here. So essentially, if you take a look at what's going on now, is there is a potential, and I did mention this in last night's video, of us setting up for another push higher. And again, it is unusual for you to break out of a rising wedge pattern. Normally you break down, but under the circumstances with with the Germany news, the ruling tomorrow, and of course a mention of QE3 and or an implementation of QE3 on Thursday will dictate what the market does. Now basically, this is the election year, and then of course everybody wants Obama to get elected. And when I say everybody, I mean people like Ben Bernanke and whatnot, because Obama is in support of devaluing the dollar or printing more money, in which case will in turn lift the markets higher. And that's what we've been seeing. I mean, when the dollar goes down, the market goes up, etc., etc. The more you print money, the more you have quantitative easing, the more you have operation twists and whatnot. That's basically printing money. And when you print the money, you devalue the dollar, and when you devalue the dollar, obviously the markets go higher. So again, I kind of talked about what I thought might happen yesterday, and I still am in the same boat as what I think, and I don't really think that they're going to really say that we're going to do QE3. I mean, that's just my thoughts. So this is basically what I'm going to talk about, is what the charts are showing me based on bullishness and bearishness, and then I'm going to tell you maybe a little bit of what I think, if I haven't already told you what I thought in the previous video. Okay, so basically we didn't get that volume on this down move, so obviously we had this a little bit of an up move, and then now what we're seeing is a bit of a consolidation pattern here. Another candle would verify a sideways pattern. Now we did not close below this candle here, which is the day before, well, yesterday's candle, which did not validate this down move, obviously, but we also did not close above yesterday's candle either, so it doesn't really validate anything, whether to go up or down. What it's doing now is consolidating. So the bullish reason, or the bullishness I should say, and this is just what the charts are saying, doesn't mean has nothing to do with any news or tomorrow or Thursday or anything like that. This is purely being a chartist, and right now the chartist technical analysis is saying that there is a potential we may pull back a little bit more, and if we do pull back for another couple of days, we will build power, and this will be considered a bullish consolidation pattern, and we could actually break through of this bigger rising wedge here. Now the bearishness is simply this: we are already overextended, okay, and essentially in an overbought state. In addition to that, we're right on to this upper trend line here, and then now we're pulling back. And like discussed in the previous video on the weekly chart, let me just switch to the weekly real quick. If you switch to the weekly chart, you can see this pivot top here just coincides and goes right in line with the pullback for this week that we have had so far. All right, so let me switch back to the daily. All right, this is back to the daily. So essentially, we should the bearishness is we are into pretty good resistance here, so there's a possibility that we may pull back. Now, if this has nothing to do with the news or anything, this is just pure technical analysis, we will have some support here at the 141.58. Now the caveat is obviously the news, so that's this is what I was talking about. Tomorrow we'll have a big day, and then Thursday is another day. So now that I've gotten the bullishness and the bearishness out of the way, this is what I think. What I think is simply this: tomorrow, let's just say Germany says, nope, we are not in any kind of quantitative easing support for anybody, blah blah blah, we're not going to do it, and that's that. Would the markets tank? I'm not entirely sure, because Thursday Uncle Ben comes out to talk, and he's going to talk about QE3 and blah blah blah, and the Feds are going to manipulate the market as much as possible with news to prop the markets higher. So let's just say for whatever reason Germany says no, we're not going to do anything. The markets don't like it. We may drop into this 141.58 before we get a little bounce. Now, the reason why I say we may actually get a bounce off this level is because the Feds are going to do everything possible in their power to keep the markets going higher, because it is an election year. And that's obviously, this is just my opinion. It's not what the chart's telling me. We may not even get a bounce off this 141.58, and we may come straight into this 50 moving average. I doubt we're going to go that low, but there is a possibility. Now, let's just say we do close, like I said in the previous video, below this bottom trend line here, or below this 141.58 mathematically calculated level. Then I think at that point, Uncle Ben, that would trigger a QE3 announcement of it happening, really, really soon, and or on Thursday. We are currently in the Operation Twist until the end of this year, so for them to use QE3, it would be their last bullet, and it would make sense for them to use the last bullet during the election year, which is towards the end of this year, November. Okay, before, and then I think we're gonna start floating higher until the end of this year. The Feds will do everything possible to do that. Now, am I 100% guaranteed that's what's gonna happen? No, obviously not. Nothing in the market is 100% guaranteed. This thing could fall, and it could fall hard, but under the circumstances, what we've been seeing, I mean, the Feds save it here, 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 and they keep on saving it, right? We kind of see this pattern here. Every time it tags this bottom trend line here, they keep saving it. And then here, and then obviously over here too now. So what's to say they won't do it again, especially when I have this mathematically calculated level here, the 20 moving average and this bottom trend line here. Yes, the rising wedge is coming to an end, meaning it is getting skinnier and skinnier, but there's still some room to possibly get up to this 147.05, so that's still a possibility. Now let's just say Germany says, yeah, we'll support what needs to be supported. Do I think the markets are going to continue way higher? Yeah, there's a possibility. We do have some bullishness, some bullish consolidation here for another pop to break out of this upper trend line here. But I don't think it's going to be much further, to be honest. I mean, again, this is a rising wedge. We are in an overbought situation. I mean, the markets are due for some sort of correction or some sort of a pretty good pullback. But I don't know if a large correction or a large pullback will happen until after the election year. Again, I think they're going to do everything they possibly can to prop the markets higher. But if there's more sellers than there are buyers, and no matter what kind of news they release, when you introduce fear into the markets, then the markets will come down. It doesn't matter what they do. But if I had to bet, I would. And again, this is not about betting. This is about probability. When you trade the stock market, you want the probability to be on your side. When you're a chartist or a technical analyst, or that kind of person, you got to trade with what you see and not what you think. You got to trade based on the charts and not with the news. So basically right now, I'm in a neutral standpoint, because this level here is in between these two mathematically calculated levels here. So it could either go up or down. That remains to be seen. And that's pretty much that. So yeah, we'll just have to wait until to see what happens tomorrow and Thursday, and then obviously Friday is going to be a low volume day. So we're and if it's really bad news, or Uncle Ben, so let's just say Germany says no, we're not going to support it. Uncle Ben says, yeah, we're going to do QE3. I just don't know when. I don't think the markets are going to like that, and then the markets are going to have a pullback. In which case, then they'll release QE3 to prop the markets higher. The quantitative easing is obviously the drug for the stock market, and that's pretty much what the markets need to continue higher. Just like when you take drugs, you get high. It's pretty much the same thing. Based on that information, I would wait. In my opinion, for me, I'm going to wait until next week to actually have the markets settle in. All the news just kind of settle in, and then see where the markets play after that. Tomorrow is also the announcement of Apple's probable iPhone, but that remains to be seen. And if people don't like what they hear, then the Apple stock will drop in. Because Apple is the biggest company within the S&P 500, then you'll probably see some weakness in the S&P 500 in addition to whatever Germany supports or does not support. In any case, I'm above 7 minutes. I'm already into 10 minutes. I really appreciate you stopping by to watch my videos. Thank you very much. Good luck to you all. God bless, and I hope to see you in the next video.